muscle game with Bitcoin, NVIDIA, Microsoft, and so forth. You don't need to do that. There's plenty of other great opportunities out there.
So I just want to push back on that a little bit because, as you said, you didn't buy any NVIDIA.
No.
And the arguments in general against why this can't go on applied a year ago. They applied even 2 years ago. So what did you miss that allowed NVIDIA not just to go up another 10 or 15%, but double since the start of last year? And also, why has higher rates, which clearly we're now in and have been for a couple of years now, not hurt equity market valuations, multiples in the US?
Because the rates aren't really that high, they're just normal rates, and because rate rises take a long time to filter through to the real economy. But I think I missed out on it because I just wasn't adroit enough or intelligent enough, and also I never liked to buy things at ridiculous P ratios and very elevated valuations. So my whole investment career has not been focused on buying stuff at, silly valuations. So it just could be that I'm like an old buffer who's just not recognized that the world has changed. But I will bet you that this time next year we'll be talking about something else. It certainly won't be NVIDIA, and it won't be the stocks that have become so familiar. And I want to point out that when the dot-com bubble burst at the end of, the beginning of 2000, the turn of the century, companies like Amazon went down by 95%. There was no change to Amazon. It was still a very fast-growing company, and it's obviously done extremely well since then. But you would have suffered a massive hit to your wealth had you invested in Cisco, Amazon, Microsoft, all those companies which had monumental falls. And we could be setting ourselves up for another monumental fall. It doesn't mean that these companies aren't good companies. It just means like the Nifty 50 in the 70s and in the year 2000, when the Ciscos and so forth were so highly valued, that they were wrongly priced, and it took decades for them to get back to the price catching up with their growth rates.
So the quick pushback to that from the bulls on Wall Street, and particularly the tech analysts that always have buy recommendations, to be say the equivalent for AI as the driver today is the internet, but in 1995, not 1999. Do you think that's possible, that there's a little bit of a pullback to come, but Microsoft then still had 3 or 4 great years before the bigger crash in the turn of the century?
Well, it is possible, but then you'd be playing what I call pass the parcel, because you're paying 40 times earnings for Microsoft, which, let's face it, it cannot grow because it's so